25% taxes are coming on Canadian and Mexican imports, day one of his administration. We've seen Mexico threatening to respond in kind, but again, the markets certainly haven't been going crazy over this. Doug Flynn joins us, Flynn Zito Capital Management. And I said right at the top of the show, Doug, that a lot of this seems to be, investors know what they're dealing with. They've seen Trump before kind of use a threat like this to try to get what he wants. In this case, He wants some action on the border, and it doesn't seem to be. I know, the automakers took a hit and some other things.
They did.
Maybe were as a result of this, but not a huge kind of market freakout by any means. What do you make of it?
No, when you dig down into the automakers, you see it because they have more direct exposure to both Mexico and China for parts and manufacturing. But the broad market kind of brushed it off and isn't really buying all the rhetoric. They don't really think that he's going to get all of this through. Even if you get it through for a short period of time, it can come off in a relatively short period of time too if you get some of what he wants. And what the spin I think that's happening now is it's kind of going over more towards fighting the illegal immigration, and fentanyl is where he's kind of using this to really tamp that down. So it'll be interesting to see how the countries respond with what they're going to do on their side of the border. But the broad market is just saying this isn't going to be as big a deal as some people are making it out to be.
Yeah, it's kind of interesting. I think people got caught maybe on the wrong end of some trades. So the first Trump, administration, they were reacting too quickly and said, "Oh, hold on a second here. Let's actually see how it plays out." He's not even in office yet. So I did think that was interesting today, that we didn't see the huge, reaction. A little bit in some areas, but not huge. Now, here's a big story for us before we get to the top of the hour. Tax Tip Tuesday is back today by popular demand. You couldn't believe a phone has been ringing off the hook. We actually don't even have a phone. But if we did have a phone still, it would be ringing off the hook. And the people want to get Doug's tax tips before the end of the year now, especially. So here we go. Tax Tip Tuesday. Increases and decreases, it says on this first screen. Take us through it.
Yeah, so what we're talking about today is we're talking about your retirement plan contributions. Everybody, or a lot of people do take money off their paycheck each week into their 401k. And you do have that window between now and the end of the year that if you had higher income and maybe you have enough cash to kind of get you through the holidays, you should raise your contribution level to lower your taxable income for the year. I would just say put it back in January if you do that, but you could certainly raise that up and lower your taxable income. On the flip side, the other thought of here is I do see people sometimes that maybe go on credit cards for the holidays, and if they put those credit card purchases on a credit card that has a balance, they're paying interest right away. So the flip side of that is if you're above the matching amount, perhaps lower your contributions to avoid going on credit cards, and again, just put it back. So just managing before the end of the year is really important, and that's the way that you want to look to it.
That's an interesting thing that you wouldn't have thought of the 401k, right? Because some people say, well, I don't have any choice. I got to use my credit card here. I got to buy Christmas presents for my family, and it's in a tough spot financially now. But you're saying this is one way kind of around it if you're making a big contribution.
The textbook, if you read a textbook, it's going to say don't do that.
Right.
But if in the real world, which we live in working with clients, it's like, well, if you're going to put something on a card that has a 20% interest, so you get a 3% match, okay, that's nice, but it's more important to avoid the 20% interest. Obviously, if you're not doing that, keep your contributions going.
Yeah.
But it's just another mechanism you might be able to pull. And everyone can change these relatively easily, right? With your 401k provider or through your employer, you can raise and lower it really easily. Then once you do that, forget I said how easy it is to change it, because you really don't want to change it.
You don't want to touch it anymore. He knows all the tricks, though. Thank you, Doug. Doug Flynn on that.